stock market crash?
We're going to have a crescendo this week, and then I think moving into next week and the end of the month and the end of the quarter, we're going to have the stock market correction that we've been talking about for a while now. We've been talking about this for a while, but the factors which affect it continue to move in our favor, and makes me believe more strongly than ever that we are due for a correction. What I want to make clear, though, I'm not predicting 1929. I'm not predicting the Great Depression, and we think it's important for investors, even if they don't necessarily need to run out and change their entire portfolio, to be aware of these factors and how it could impact their portfolios so that they can make a move if they choose to do so. Now, we have received so many requests to make this public that we are gonna make it available to regular paid subscribers on Substack rather than just our premium readers. Again, this is not a guarantee. We don't know for sure, but we are prudent investors. We think a correction is on deck, and we are prepared for it, and we will even be more prepared for it by the end of this week. I've been doing this for 26 years now. I've seen it 3 or 4 times myself, and they are driving the majority of the market's return. And those large cap tech stocks growth are very much influenced by the AI bubble. Now, whether you want to call it a bubble, a mania, just a euphoric time, or maybe it's different this time, it is very much related to the AI phenomenon. And the valuations on some of these technology companies now are crazy. And not only that, but the euphoria is evident everywhere you look. And the other thing that always happens in all of these episodes is you end up getting accounting misrepresentations, to put it politely, and fraud, if you want to be a little bit more blunt about it. They were all clear and very present, and I was even around for this one in the dot-com bubble of the late 90s and early 2000s. When markets start to get fragile, leverage contributes to it, because the minute markets start to roll over, that leverage goes against the players in the same way, actually quicker than it helped them on the way up. And I've at least referred to it a lot, is that there's a new factor, and it's probably the most important factor. And this is the reason that we think it's important right now, and that we think that there's the imminent possibility of a correction, and that is passive management. Machines now make the decisions, and the prices on the screen determine whether something is being bought or being sold.
Thanks for subscribing.